Hello and welcome to the Comm 217 midterm review. We are doing Chapter 6 problems and we're doing problem 3 right now. So let's take a look at the required. Required A, prepare the necessary journal entries related to updating receivables and recording bad debt expense for the year ended December 31st, 2015. So we have to basically just update our receivables for the year. B, show how trade receivables will be presented on the statement of financial position as of December 31st, 2015. And finally, C, calculate and interpret the receivables turnover ratio and the average collection period for FCB for 2015. So let's take a look at the problem. FCB Corporation began its fiscal year 2015 with a balance of $475,000 in its trade receivables account and a balance of $33,000 in the allowance for doubtful accounts. During 2015, FCB had credit sales of $6,675,000. Also during the year, the company wrote off $33,500 of accounts receivable that were deemed to be uncollectible. Although one customer whose $4,000 account had been written off that same year surprised management by paying the amount in full in late September. The total cash collected throughout 2015 amounted to $6,568,500, which includes the surprise $4,000. FCB's objective is to collect its receivables every 30 days. The industry's average collection period is 32 days. In preparation for the audited year-end financial statements, the controller prepared the following list of trade receivables at December 31st, 2015, grouped by age. So with this problem, there's a little trick there for you. They're writing how many sales there were, etc., the trade receivables. You don't need to calculate it because if you actually look, the amount of receivables is already calculated for you right here. So the only thing you really need to keep track of is the AFDA. So let's make ourselves a little T account here for the allowance for doubtful accounts. And we began the year with a $33,000 credit balance. During the year, all those sales were done. $35,500 were written off, although one customer surprised management by ending up to pay. So we're going to add that back to the allowance for doubtful accounts. And so that's where we're at. Let's take a look at the table here that we have. So we have an aging of accounts table. And so the amount written in this column should be multiplied by this table, and that's the amount that's probably uncollectible. So if we multiply out each table, we will be able to figure out what our receivables should be. One important thing to note, though, however, is the accounts that are outstanding over 75 days are considered to be fully uncollectible. So if it's fully uncollectible, we should be writing that off as well. So we're going to debit AFDA by $25,000, and we are just going to get rid of this entire row here, and we're only going to focus on the other rows. So the first column, there's $270,000 that has a 3% chance of being uncollectible. So that's $8,100. 8% chance of $117,000, so that's $9,360. 80,000 times 20% is 16,000. 30% chance of 38,000 being uncollectible is 11,400. And the last row is $20,000, 50% chance of being uncollectible. So we're just going to add these up. So 8,100 plus 9,360 plus 16,000 plus 11,400 plus 10,000 gives us 54,860. And that is our desired ending balance for our AFDA. So right over here, 54,860. This is our desired AFDA. And so we'll do a journal entry that would affect our T account here to make up that balance. One important thing to note, since we've written off this last row here of 25,000, our receivables are no longer 550,000. It is now $525,000. So we can now do our journal entries to record everything. So required A, we're going to update our receivables. So we wrote off that 20,000. So we debit AFDA and credit trade receivables for 25,000. Now, we know that we want our AFDA balance to be at 54,860. So if you sum up everything here, we have 33,000 plus 4,000 less 35,500 less 25,000, and that will give us a balance of negative 23,500, or a credit balance of 23,500. So we need to get from negative 23,500 to 54,860. So we'll record the journal entry for that. So we have to debit bad debt expense, and we credit AFDA. And so we want to get to 54,860 less a negative balance of 23,500, and that will give us 78,360. And that will bring our trade receivables finally to a balance of 525,000, and our AFDA to a balance of 54,860, because we were at a negative balance before. Required B, show how trade receivables will be presented on the statement of financial position at December 31st, 2015. So, required B, and current assets, because receivables are a current asset. Trade receivables less AFDA, and that'll give us our net trade receivables. So we had 525,000 less 54,860, and that'll give us net trade receivables of 470,140. And finally, required C, calculate and interpret the receivables turnover ratio and the average collection period for FCB for 2015. So, receivables turnover ratio is your net credit sales divided by your average net trade receivables. So our net credit sales for the year, and if you look up top, we had credit sales of $6,675,000. So $6,675,000 divided by our average net trade receivables. So we began the year with 475 trade receivables less 33,000 AFDA. So 475 minus 33, we began the year with $442,000 beginning balance. So 442,000 plus we ended just now with 470,140 divided by 2. And so our ratio, our receivables turnover ratio is 14.64. So on average, our company, or FCB, collects every 14.64 days. The average collection period, so average collection period, is 365 days divided by 14.64. So 365 divided by 14.64 gives us 24.93 days. So on average, they collect every 24.93 days, or you could say 25 days at that point. So how do we interpret it? On average, collects our accounts receivable 14.64 times per year for an average of once every 25 days. And if you recall, The objective is every 30 days, and the industry average 32 days. So we can say this is better than the industry average and below FCP's collection standard, their collection objective. And finally, let's interpret this a little more, and we'll just say no trouble collecting, effective credit policies, since they're doing better than the industry and they've beaten their own goals. And so we'll say good collection policies and effort. So that's it for our review. Good luck on your midterm, and we hope to see you in preparation for the final. Thank you.